Welcome to Microchip's briefing. The content of the briefing includes: chip-making subsidies are not the answer to supply security worries. How China's tech ambitions slip through the U.S. export control net. Analysis: Wall Street's Magnificent Seven face moment of truth as earnings season arrives. U.S. chip restrictions spark panic in China for NVIDIA's RTX 4090 graphics card. South Korean chipmakers get a reprieve. Chip-making subsidies are not the answer to supply security worries. Nikkei Asia. The UK's National Semiconductor Strategy, released in May, has been criticised for its lack of ambition and compared unfavourably with the tens of billions of dollars in subsidies being offered by other governments. The UK is choosing a different path, based on using its comparative advantages. The assumption that building domestic fabs will be enough to address national security issues is flawed, as much of the back-end work is done in Asia. The Asian labor-intensive, low-margin back-end manufacturing is unattractive for relocation to the West, but it provides ample opportunity for attackers to compromise a chip or the final product in which it is contained. Governments should be investing in technical solutions to screen out malicious hardware, rather than re-engineering the entire supply chain. The assumption that domestic companies will want to use homemade chips is also flawed, as chips will be more expensive to produce in the US and Europe than in East Asia. The UK's strategy, which focuses on segments of the supply chain where it has a comparative advantage, is an alternative approach to the subsidy race that other countries are engaging in. How China's tech ambitions slip through the US export control net. Nikkei Asia. China is finding ways to sidestep US export controls on advanced chip technology, according to industry insiders. The US has been attempting to curb China's chip ambitions, but the clampdown has its limits, as shown by Huawei's recent release of the 5G-capable Mate 60 Pro smartphone that was made with the company's own chips. China is using shell companies, smuggling, and the creative use of old machines to bypass the controls. It is also benefiting from loopholes, such as those created by the US's exemptions, and the late introduction of export controls by Japan and the Netherlands. Analysis: Wall Street's Magnificent Seven face moment of truth as earnings season arrives. Reuters. U.S. chip restrictions spark panic in China for NVIDIA's RTX 4090 graphics card. South China Morning Post. NVIDIA has removed its inventory of GeForce RTX 4090 graphics cards and other products from its official store on Chinese shopping platform Taobao, following the U.S. Commerce Department's latest restrictions on the export of advanced semiconductors to China. Several of NVIDIA's major hardware partners in China have also pulled out stock of RTX 4090 from their respective online stores on Taobao or JD.com. The sudden scarcity of RTX 4090 graphics cards in the mainland's consumer market demonstrates the far-reaching impact of the U.S. export restrictions. South Korean chipmakers get a reprieve. Economist. South Korea's chipmakers, Samsung and SK Hynix, have received an indefinite exemption from U.S. export restrictions on advanced chip-making equipment to China. However, South Korea's chip industry, which relies on China as both a manufacturing base and market, may still need to look beyond China. While the exemption is valuable for the companies, they may face challenges in upgrading their factories in China due to potential constraints on specific types of equipment. Additionally, South Korean chip exports to China have been affected by China's slow economic recovery from the pandemic and its investment in its own semiconductor industry. Canon tries to break ASML's grip on chip-making tools. Economist. Canon has unveiled a nanoimprint lithography machine that it claims can etch the smallest transistors used in the most advanced microchips. The Japanese company hopes to compete with Dutch firm ASML, which has held a monopoly in the semiconductor industry, by producing 2-nanometer chips. Canon's machines could be cheaper than ASML's and offer a more detailed pattern. However, they are not yet effective in dealing with complex chip designs. Analysts also predict it will take 5 years for Canon's tools to be used in mass production, with Chinese firms potentially the main customers. TSMC thinks the turn in the chip cycle is nigh. Wall Street Journal. Taiwan Semiconductor Manufacturing Co., TSMC, has reported an 11% YoY decline in revenue for Q3 2019, but the chipmaker says it has seen signs of stabilization in demand for smartphones and personal computers. TSMC also believes demand related to artificial intelligence, AI, will be a long-term boost. In July, TSMC said AI applications accounted for 6% of its revenue, but expects the segment to grow by an average of 50% annually for the next 5 years. However, geopolitical risks remain, following Washington's new restrictions on AI chip sales to China and Chinese firms abroad. Pre-market, world stocks slip as treasuries graze 5%, Middle East war rages. The Globe and Mail. Global stocks fell on Thursday due to investor concerns over the Middle East conflict and rising 10-year treasury yields. The prospect of no rate cuts from the Federal Reserve has driven 10-year treasury yields to their highest level in 16 years, while undermining stocks. Investors have also shifted away from bonds and towards gold as a safe haven option. The MSCI All-World Index was down 0.25%, reflecting a drop in Europe's stocks 600 and weakness across Asian equity markets. The day also brings a string of major company results, including TSMC, Philip Morris, Blackstone, and Fifth Third Bancorp. TSMC optimistic over premium chip demand despite revenue hit. Financial Times. Taiwan Semiconductor Manufacturing Company, TSMC, has reported a decline in quarterly revenues amid weakening global demand but struck an optimistic note on demand for its highest-end chips. TSMC's revenues for Q3 were down 11% from the previous year, while net profit was 25% lower. The decline in revenues was attributed to falling demand from automakers, particularly in China, where weaker-than-expected demand for electric vehicles has impacted component suppliers. However, TSMC predicted a rebound in demand from the automotive sector next year, particularly as the shift to electric vehicles accelerates. TSMC also highlighted strong demand for its premium chips, including those at the 3nm level of miniaturization, and predicted strong demand for its future 2nm chip. The company expects to spend $32 billion on growing and upgrading its production capacity in 2023. Taiwan's chip oracle and Japan's new wood. Nikkei Asia. The ongoing conflict in Gaza is impacting investor sentiment and dampening risk appetite in the Asian stock markets. The tensions between the US and China, along with the deepened geopolitical divides caused by the Israeli-Hamas war, have led to a cautious approach from investors. This is reflected in major stock indexes such as the Hang Seng and CSI 300, which have become increasingly jittery. The CEO of JP Morgan Chase has warned that this may be the most dangerous time the world has seen in decades. The tensions are also affecting the tech industry, with the founder of Taiwan Semiconductor Manufacturing Company, TSMC, stating that there is no globalization or free trade in the semiconductor space anymore, and that national security is the only priority. In addition, geopolitical tensions between the US and China have made it difficult for American companies to invest in China's tech sectors. As a result, the billionaire boss of Hongshan, the independent entity that hived off from Sequoia Capital's China business, is looking to expand globally. Finally, a group of global venture capitalists has voiced solidarity with Israel and its startup community, reflecting Israel's position as a prominent tech hub. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.